Good morning, listeners. We begin an active week for the financial markets, and our aim is to bring all the updates just for you at Almus Market Mornings with Shikhar Garg. Now, folks, it's going to be quite an interesting week, as I mentioned, with all sorts of central bank actions on the display. The US Central Bank is expected to have a skip, which is a new variant, while the European Central Bank is going with a hike, most probably. Japanese central bank is also expected is going to give an action which is most expected by the market participants, which is to continue to ponder whether to bring any change in the easing policy. And then there's the Chinese central bank, which is showing that there is a small chance that they can come up with cutting off its medium term lending facility. Now there's a whole host of actionables by the central banks, and the data is also going to be data heavy week, rather, I'd say. So JK, what is your take on this week's action with such dead volatility in the past?
Good morning, Shikhar. Yeah, I think, yes, as you mentioned, there is a whole host of data and economic events in this week. But I mean, is there going to be any surprise? Because most of the markets know what the central banks are up to, and the forecasts are quite, well in the majority for Fed to hold rates, ECB to hike, and BOJ to stand pat. And of course, China may be a small surprise if they cut their medium-term lending rate. Yes, even CPI data for US is likely to come down, the headline, that's from 4.9 to 4.1. So a drift lower in the CPI again is not going to be no big surprise to the market. Of course, they will look at the core inflation as well. So definitely we had a very quiet market last week. It can be better this week, but I'm just seeing some conflicting forces. Like US economy had some weak data last week, ISM services PMI, like almost touching the contraction territory, and services had been holding up the economy for long, and that came down, and all components of ISM services were weak. Factory orders were again down, and most important of all, the jobless claims, went to 261,000. That was a 18-month high, coming some 28,000 higher than what was expected. So all reasons for dollar to weaken, but it has not weakened. Dollar is not only not weakened, but even the yields have been holding higher. So this is one, thing that probably people will find difficult to explain. At the same time, we also have a conflict between US economy and the Eurozone economy. Euro economy is also weak. US economy is also showing distinct signs of weakness. So which one to favor? So if Euro is not moving against the dollar, then the dollar index is dead. So because that has the maximum weightage of 57%. So what we find is that other currencies with much lesser weightage against the dollar, they have moved based on individual policy moves and also economic developments. Like the Australian dollar recovered, Canadian dollar recovered of their central banks hike their rates, and Japan yen, of course, is again on the weakening side, but again within the range. Chinese yuan continued its weakening trend because there is no sign that the economy is really recovering, and with expectation of further easing in their policy and the differentials between other countries widening, Chinese yuan is now even trying to break 7.15 clearly and maybe headed towards 7.20. Now look at the rupee. It's not surprising that it was dead, because most people do come to office nowadays with the preparation that rupee will not move. And yes, central bank very active. At the same time, I also find that central bank is quite justified in not allowing rupee to appreciate, despite the continued flows that we have been seeing. Like in May, we had more than 5 billion of flow, and in June, we already have more than 1.3 billion of inflows from FIS, despite all the concerns about valuation of Indian stocks. Now, what the central bank must be looking at is the weakness in the Chinese yuan, which is 6.5% weak against the dollar. And against the rupee itself, Chinese yuan is weaker by almost 6%. So almost 5%. And that is not comforting because we have one of the largest deficit with China at 77 billion, and allowing Chinese yuan to be cheaper, or rather INR to be stronger against the Chinese yuan is only going to increase your trade deficit with China and probably affect your overall trade deficit. I think that's probably the reason why the central bank is just keeping the rupee stable, not allowing it to strengthen, particularly keeping the Chinese yuan and the PS in mind. Of course, dollar index is not giving any clues for the rupee. I think this state of affairs will continue for rupee until we see any bigger move either in the dollar index or in the Chinese yuan. We have our CPI tomorrow, which is like again expected to come down to 4.5% from 4.75%. That's the headline. And the month on month is forecast to be at 0.4% versus 0.51% last month. So another thing that is probably not explainable is the bond yields in India are not falling. And that is a big surprise because we have inflation coming down steadily. RBI has held rates steady for 2 consecutive meetings, and possibly not. Now people are talking about when and not if RBI will cut. So despite these, there is no fall in the bond yields. And domestic players, of course, long, so we can't fault them for not buying more. But FI interest is also missing. Whatever FI flows they got is all towards the equity. So that's again something. So we're still searching for some of these answers as we enter into this week. Yes, we have all these big events, 4 central bank meetings, including Swiss National Bank, of course. And maybe at the end of this week, we get some clue on the dollar moves. So that's what, as far as stock market is concerned, there have been divergent views. Fundamentally, there is a sense of a fall going by the recessionary trends observed, rates remaining higher and expected tightness in liquidity. Technically, some view the recent recovery in S&P 500 by more than 20% from the low as a new bull market. But at least on Friday, that was not seeing building on its gains, and a big gain in the beginning was actually lost out towards the close. And today also we see in the Asian market, excepting Japan, all other except Japan and Taiwan, other markets are actually seen drifting lower. So not really taking cue from those expectations on S&P 500, going into a new bull market. So we'll see if what kind of statement Powell makes after a pause. If it is going to be hawkish, then probably the market has to wait for it, any bullish trend. But again, future moves on the Fed, I'm sure is going to be dependent on a lot of data that will come out in the lead up to the 6 weeks after this meeting. So we have a long wait for really to see whether Fed has hit the peak or it's still going to raise. But going by history, most people believe that Fed, when it stops and it doesn't go further. So that's only history, but history can always change. So we'll lot to wait for and see what gives the direction for the dollar. And yes, I think crude oil is also interesting because it has lost further ground after the recent output cut announced by Saudis. And despite US and Iran denying reports that they were close to a nuclear deal, oil prices have gone down on Friday again, based again on economic weakness across the regions. Brent really lost 7% from the highs of the week. So all in all, so far quiet and rangy markets, but hopefully the events of this week, somewhere we have a surprise and we do get move on in the markets. Thank you.
Okay, JK, that was quite good. And yes, folks, I mean, the way things are going on, it's quite interesting to see that the market participants are still talking about a skip. I mean, yes, JK mentioned there is also a segment of the market participants which are talking that once the Fed pauses, they pause. But it's going to be something new this time as the market participants are talking about a new variant of skip. Only time shall tell whether we see the skip happening. But on the other hand, if we have to talk about the inflation, yes, for US, we are expecting that the inflation may move lower, but it's the core inflation which needs to be tracked and which may tell, along with the FOMC's commentary, whether the FOMC is expected to remain hawkish in the coming days or not. The jobless claims and the other macro numbers with respect to services and such were showing weaker signs for the economy of US, just as the European economy macros are also showing the concerns. It's the Indian data as well, which will be released, with inflation being released tomorrow. But the consecutive pause actions by the RBI has led the market participants to now talk about a possible when of the rate cuts rather than if of the rate cuts. So it's going to be interesting to watch how things pan out. But rest assured, folks, we shall continue to come with all sorts of updates right for you. Thank you so much for listening, and we shall come back again tomorrow.